Welcome to this course. I've built this course keeping the 20-80 rule in mind. That is, I'm only covering 20% of the key concepts discussed in the trading world, but that will make you 80% functional. Doesn't matter what stage you are in when it comes to trading. You could be a beginner, you could be an intermediate trader, or you could be an advanced trader, but there is something for everyone in this course. If you're an intraday trader or a scalper, there are strategies for you in this course. If you're a swing trader or a position trader, there are strategies in this course. And if you're a candlestick analyst, there are strategies in this course. Like they say, recognizing the setup is one thing, and trading the setup is completely another thing. You could go long a stock and make money, and I could short the exact same stock and still make money. Like they say, prices don't move based on fundamentals, but they do move based on the perception of fundamentals. With that being said, let's dive right into the course. Technical analysis, TA, is the study of price movement, volume, and the relationships between those two. And the goal here is to use TA to increase our probability of successful trades. Now, TA is just analyzing a stock's history and current price actions to gauge an understanding of what may happen in the future. The number one critical thing here is price. What is the stock currently trading at? And then you look at the volume. So what's the number and the frequency of transactions? And then you look at the emotions on the candlesticks and so on. Well, these patterns repeat over and over across all time frames, and then you can use these technical indicators to help increase your probability of successful trades and then measure your risk beforehand. Like I mentioned, the patterns repeat over and over and over, and you must be able to recognize the setups to take advantage. Now, everything works until it doesn't. So don't put all your attention on technical analysis. Again, there are many components to trading, and TA is just one facet that will help you. And technical indicators are not required, but they can aid in the trading decision process. So the indicators that I'd be using from time to time in this course that would require high-level explanation, and they will be covered in this course at various other points in the videos once you go through. So I'll be going through some concepts of support, resistance, moving averages, price action, volume, relative strength index, and then Bollinger Bands. I think these will give you a very high-level overview of what it is that you'll be going through in this course to help take your trading to the next level. Resistance. Well, the concepts of trading level support and resistance are easily two of the most highly discussed attributes of technical analysis. Now, this is an important part of analyzing chart patterns. At first, the explanation and idea behind identifying these levels might seem easy, but as you'll find out, support and resistance can come in various forms, and the concept is more difficult to master than it first appears. Firstly, what is support? Support can be viewed as the floor, that is, the price at which more buyers start coming in to support the price of a stock, essentially preventing the price from declining further, also known as preventing breakdown to the downside. Now, support is the price level at which demand is thought to be strong enough to prevent the price from declining further. Let's say that the downtrend can be expected to pause at these levels and buying interest for a stock goes up. What is resistance? Resistance can be viewed as the ceiling. That is the price that finds more sellers that resist the upward rise of stock prices. Think about breakouts to the upside having a strong resistance. Now, essentially at these levels, there is selling interest for a stock whose prices have increased quite a bit. Now, whatever time frame you are trading, you can see these on the charts where the stock price bounced to the upside from a low and where it stopped going higher. Now, the more the number of times you see this on a chart, it could be easier to establish the support and resistance. Now, why do we need this? Essentially, to identify price points on a chart where the probabilities favor a pause or reversal of a prevailing trend. Now, once you identify these levels, you can use it to identify entry points or exit points for a trade. Now, two things can happen once the stock price hits these levels. So, say a stock hits the support here. Say it hits the support. Now, two things that can happen. So, at this point, either the buying interest is going to go up, so the stock can either go back up, or it could violate these established support levels, and a breakdown to the downside could occur until the stock hits the next support level. Now, that violated support level would become the new resistance, if you know what I mean. Again, technical analysis is not an exact science, so these support and resistance points are not very precise. So price movements can be volatile and briefly dip below support. For example, it does not seem logical to consider that the support level is broken if the price closes a fraction below the established support level. So for this reason, some traders and investors establish support zones. So say for the first time a stock has a support at $39, so in this case, the next time after a few months of trading in a range, it has a support at $40. And also keep in mind that the number of times a stock price tests a support or resistance area, the more significant the level becomes. So when prices keep bouncing off of a support or resistance level, more buyers and sellers would notice this and will base their trading decisions on these levels. Again, forget the fundamentals of any stock and keep that aside for now, but market psychology plays a huge role in trading simply because traders remember the past and react to changing conditions to anticipate future market movements. Now, what are the different methods available to establish these levels? Again, this can be identified on charts using trend lines. Moving averages can also be used as a support and resistance levels, but more on that later when we discuss moving averages. I've dedicated a separate video for this. Before I explain trend lines to establish these levels, there is another interesting thing that traders use to establish resistance when a stock is going up and support when a stock is going down. So this is called as round number price magnets. I have not written anything about it here, but an oversimplification here again is if the stock price, the stock price might have a difficult time moving beyond a round number, such as say $50 or $100 per share. So this price will often be tested, and this is something that you need to keep in mind. Anyways, over to trend lines. A stock is said to be in an uptrend if it makes a series of higher highs and higher lows. And a stock is said to be in a downtrend if it makes a series of lower highs and lower lows. Now, to get the trend line support and resistance, so again, if a stock is trending up, you would draw a straight line connecting all the higher lows to get the trend line support, and draw a line connecting all the higher highs to get the trend line resistance. So in this case, what we've done here is, and we just did the opposite for a stock that is trending down. What is a stock that is trending down? If it makes a series of lower highs and lower lows. So I'm connecting all the lower highs to get the trend line resistance, and all the lower lows are being connected here to get the trend line support. So again, the basic rule is that a stock's price will bounce upward off of a trend line support and downward off of a trend line resistance. So when a trend line is broken, especially on a high volume, then the gain momentum will push the stock significantly either above or below the broken trend line. So in this case, we're looking at a downward trending stock. So you can use this as a trend line resistance and use this as a trend line support and then trade. So say a stock hits here, you can go long and sell once the stock hits the trend line resistance. Likewise, you can go short here and buy it back to cover here. Now, if a stock does not trend and if it moves sideways, as you can see here, then that is called as a range bound stock. And in this case, you would use the horizontal support and resistance. So we can connect variable pivot highs and lows, and it has the appearance of a rectangle pattern here. Again, it consists of at least 4 connect points. So this is because it needs at least 2 lows to connect as well as 2 highs. But in this case, you can see that the stock is clearly range bound. It's trading sideways. Right? Now, you can manually look through charts to locate these to trade the support and resistance pattern. For example, if a stock is trending up or range bound, you can buy a stock at the support and sell at the resistance. Likewise, I mentioned earlier that you can short the stock at resistance and buy it back at support when we were talking about the trend line resistance and support. Again, if you use finviz.com, so for example, this chart, I pulled it off from finviz.com, it automatically recognizes these patterns, and I will show all this on FinViz in the next video. This is going to make our life easy just to understand these concepts, and if you want to trade these patterns, it's going to be very, very helpful. Thank you. Let's look at a stock chart to see if we can establish support and resistance levels or the zones. So for this, I'm going to take Amazon. Let's see what the stock chart is to see if we can pull the support and resistance levels. All right, it looks like in the past 6 months, Amazon has been trading pretty much in a range. It's been a range-bound stock, and quick glance, I would say that in the short term, perhaps support seems to be around, well, I would say 3100 seems to be a fair support for Amazon. And for resistance, I'd say maybe, okay, let's say 3450. Around 3450 is a good resistance. It could go up. Well, 3450, you can even say 3500 perhaps as a resistance. So I'd say it's range bound between 3100 to 3500. So in this case, Amazon turned out to be a range bound stock, so it was somewhat easy to glance the support and the resistance levels. Talked earlier about support resistance concepts. Here I want to show you how we can use the FinViz site. I think I talked about this earlier. So let's see how we can bring some of these concepts to life, as well as also build some trading strategies around support and resistance so that we can drive home some profits. Now, FinViz is great because for any stock chart you pull, you don't have to worry about establishing these support and resistance levels manually because their algorithms do it for you. So let me show you these. Now, once you get into the website, you can see signal here. So you see trend line support, trend line resistance, horizontal support resistance, and then you see all these tickers associated with those particular signals. Now what we need to do is, so let's say trend line support, these are the stocks with the current price near the strong trend line support. Now you could go long on some of these stocks once you look at the full stock chart and once you understand what the trend is. Trend line resistance, these are the stocks with the current price near strong trend line resistance. Again, you can look at potential shorting opportunities, but then you have to look at the full chart to get that picture in mind before you take some decisions to trade. Horizontal support and resistance, these are the stocks with the current price near strong horizontal support and resistance. Again, you have to look at the chart to see whether they are near support or resistance and then build your trading strategies around it. So, but once you get into the signal, once you pull up some of those charts, you will see what I mean. And again, you can also look at channel up, channel and channel down. These are fairly similar to the support and resistance. Channel up is nothing but stocks that are in an uptrend, and you can see the current price is near the strong channel up pattern. Again, I will show you this so you will understand what they actually mean. Again, channel is similar to the horizontal support and resistance, and channel down is stocks with the current price near strong channel down pattern. Again, in each of these patterns you will see the support and resistance, and you can build strategies to either go long or go short. So let's go through one by one. So let me click trendline support. As you can see, it's pulling a list of all the stocks that are near their trendline support. Now sometimes again this scan might be slightly off, but once you look at the chart you will know where the stock is. So let me go through VFC, for example. So trendline support. So in this case, it looks like the stock has been trending high. When I say it's been trending high, you can see the higher highs and the higher lows, and then all the highs are being connected to get the trendline resistance, and all the lows are being connected to get the trendline support. So this scan is identifying stocks that are nearing the trendline support. So for example, this stock is here at $79.51, which is the support line. Now you don't have to worry about manually establishing these, as you can clearly see the resistance and the support lines. Now you can potentially consider going long in this stock. You can buy the stock because the stock is nearing the trendline support line. And so for example, you can enter at 79.51. So tomorrow when on Monday or Tuesday when the market opens, today is Friday, the February 12th, so Monday is family day here. So the market opens only on Tuesday. So let's say on Tuesday you go long at around maybe 79.60 or whatever. You have a potential opportunity to make about somewhere near $89, $90 is where you see the trend line resistance. So the stock has a potential to run up to $90. So let's say you get in at 80 and you have the potential of making $10. The reason why I want to go long is the stock is in an uptrend, so I would consider going long once it hits the trend line support. Now you can keep the stop loss at say maybe a few points below this support line. I would say somewhere between $75 could be a good stop loss here for this particular stock. Now let's go through horizontal support and resistance. So this is fairly similar to the range bound stocks, where you can see the support lines and the resistance lines that are being drawn. So this is a classic example again. So you can see the horizontal resistance line at the top, horizontal support line at the bottom. The FinViz chart already populates this line for you, so you don't have to manually draw this. Now let's see where the stock is trading at. So it is not nearing support just yet. It looks like it has, where's the support line? Is it about, so about $9. So right now it's at $9.76. So I would wait for the stock to come down to $9 to potentially go long, with the stop loss a few points below that $9 entry. So again, you have a potential to make, the resistance is at let's say $13. So from $9 to $13, so you have a $4 potential profit. Again, you can go long once it hits the support line. Let's look at trend line resistance. So this is showing all the stocks that are near the trend line resistance. So again, in an uptrend, all the lows are being connected to get the trend line support. All the highs are being connected to get the trend line resistance. Now I would urge caution if you want to short these stocks, just because some of these stocks are nearing the trend line resistance, and you would hope for it to come back to the to the support. Because the stock is in an uptrend, I would urge caution, because if it keeps going higher, you would lose money. So let me pull up this chart, for example. Eric. So simply because the stock hit the trend line resistance a few days ago on the 3rd of February, if you think you can go short simply because the stock will come back down to the support at around $12, you might be wrong because the stock is continuously trending higher. So you have to follow the stock trend. So I would not short the stock. As you can see, this is breaking above the resistance and it's continuing to move up. So I would urge caution. Now let's look at channel up. Similarly, like I mentioned, stocks in an uptrend. So you can see the trend line resistance, which is connecting all the highs, and trend line support connecting all the lows. Fairly similar to the trend line support scan where you see stocks nearing the trend line support. But in this case, you have to look at the chart to see whether it is near resistance or support. The channel up scan just pulls all the stocks that are in an uptrend, right? So let me pull, this might be a good example. The reason why I picked this is because this candle is near the support. So you can consider going long for this particular scan, for this channel up trend. If you look at this, for example, stock is nearing resistance, so I would wait. I would not short the stock because the stock's in a strong uptrend. I would wait for it to come back to the support line to go long. Let's look at channel. Channel would be fairly similar to the horizontal support and resistance, but again, you have to look at the chart to see whether it's at support or whether it's at resistance or if it's in between the two. So here, the channel is, again, it's a range bound stock. Stock is nearing support levels, so you can consider going long. But here again, what's interesting with FinViz is it shows that the stock tried to break this resistance level, but it failed to break this resistance on numerous occasions. So meaning this is a very strong resistance level. So meaning you could short the stock if it does not break out of that particular range, which is the $7 range. Let's see channel down. So channel down is interesting because it pulls all the stocks that are on a downward trend. Here you can see all the lower highs are connected and then the lower lows are connected to get the trend line resistance and the trend line support. So in this case, again, you have to see where the stock is trading at. So because the channel is downward, I would look at going short once the stock hits the trend line resistance. I would not consider going long when it hits the trend line support simply because the stock is in a downtrend. I would urge caution to go long in these stocks where the trend is against you, right? So I would consider shorting this all the time it hits the trend line resistance. So for example, in this particular stock, it is near the resistance line. So we could potentially consider going short at around 22.96. And then you could buy back to cover or close your trade at around maybe $21. So that will give you a potential a potential profit opportunity. So I guess I went through each of those different scans where you see the trend line support and resistance, and you can see how we can build some trading strategies to just simply trade the support and the resistance line, and then you can make a few profits. Again, the strategy will not work all the time, but for the most part, all traders are looking at this support and resistance lines and they're going to be making decisions. So you have a high probability of making profitable trades by looking at these scans in FinViz. Again, this is just the free version. If you want, you can do a paid version and do far more complicated screeners, but then for our purpose, just to trade the support resistance concept, this is more than enough, and I've showed you enough examples. Thank you. Strategy. D-line trading. So what's the setup like? This is one of the strategies that I learned and picked up from, well, thanks to Master Stephen Bigelow. You can look him up online and read about him, and he's published a few candlestick analysis trading books. I highly encourage you to read them. But coming back to this T-line trading, it is the 8-period exponential moving average, which is called as the T-line or the trigger line. This is an extremely effective indicator and it should not be ignored. Now, T-line trading is a flexible, reliable investing technique that will benefit most swing traders. And this trading technique works best when trading on daily candlestick charts. It also works on monthly, weekly, daily, 4-hour, 1-hour, 30-minute, and even 15-minute charts. Just mechanically follow the T-line and see how you can do. How can you trade this? So like I said, the T-line is the 8-day exponential moving average. Now in this strategy, we wait for the exponential moving average to tell us when to buy or when to sell a stock. So simple rules here is you can go long or buy a stock if a stock's price closes above the T-line. That is, if a stock price closes above the 8-period EMA, well, you basically want the price action to close above the T-line in order to stay in the trade. And you sell if the stock closes below the T-line. Now you can look for shorting opportunities. You can go short or sell short if a stock closes below the T-line. And you can stay in the trade as long as it does not close above the 8-period EMA, which is the T-line. So you would essentially buy it back to cover once the stock closes above the T-line. Again, I will show this to you in an example so that will make much more sense as opposed to just going through this theory here. Now also keep in mind that the further the stock moves away from the T-line, the more likely it's going to come back to it and test it. Again, when I show this to you on a chart, it will make much more sense. Now the strategy works the best in trending markets. Many traders and investors alike are using this T-line as an indicator for entering and exiting trades with great success. It is extremely accurate, so give this T-line trading a try. It just might change the way you think about investing. Now, how can we identify and screen for stocks to trade this T-line? So one is nothing but the manual method. Just pull any stock that you like or usually watch and just add the 8-period EMA onto the daily stock chart and see where the stock is at. Now you would essentially set up this T-line on your charts and then watch for yourselves. It is quite simple. Now the second method is to use stock filters such as stockfetcher.com. Again, I will show you how to use stockfetcher to run this in the next video. But right now, let's look at this manual method. I'm going to pull a stock chart. Let me pull Google because I like Google. So all I'm doing is I'm going to add the exponential moving average for 8 days. I don't need the simple moving average. So the 8-period moving average, exponential moving average, is the T-line that's added to this chart here. Now you can see this. So the stock closed, Google stock price closed above EMA. So let's say you want to buy the stock here because it closed above the 8-period EMA, which is above the T-line. So let's say I get in here. I stay in this trade as long as the stock price maintains and closes above the T-line. So the minute it closes below the T-line, I'm out of this trade. So here on the 4th of September, I get out of Google. And let's say if you want to go short, you can go short here and stay in the trade, stay in the trade, stay in the trade, stay in the trade, stay in the trade. Here it closes above 8-period EMA. I would close the trade and buy the stock to cover. Let's say you want to go long again. So sometimes there might be misleading signals. Well, it may not be accurate 100% of the time. So in those cases, again, if you were to go along here, you would get out here. So you wouldn't make a lot of profit, but at least it's a good rule to keep in mind to get in and get out of the trade. That way you can limit your losses as well. So better safe than sorry. Now here again on the 8th of October, Google closed above the 8-period EMA, above the T line here. So I'm going to go long here. What was the close at? So let's say about 1483. And I stay in the trade, I stay in the trade, I stay in the trade, I stay in the trade. I would probably get out here. So 1483 to 1530. That's a pretty good sign. Again, the next day it closed above 8-period EMA, so I would be looking at going long, right? And I get out. So you can keep getting in and getting out and just follow this T line all through, right? And there was one more point that I made, that the further away the stock moves away from the T line, then chances are it will come back to test it. So for example, right now here on the 3rd of February, Google moved far away from the T line. Now, well, there is a high probability that the stock will pull back to test the T line, which is at 2016. So I think this should give you an example of how the T line works. We will go through how the stockfetcher works and how we can use to screen stocks to identify tickers that close above EMA so that you can get a few symbols that you can trade. Okay. Using stockfetcher. So let's go to stockfetcher.com. So I use this site to pull the list of stocks that pretty much closed above the T line. That is the 8 exponential moving average in order to go long. That is to buy those stocks. Again, you don't have to know the code, but if you go through this site for simple syntaxes, you can write pretty much any filter you want. But for our purpose, this is more than enough in order to identify the stocks that are closing above the T line. So I'm going to be using this filter here. Filter, I'm pasting it. So here's the screening filter criteria. I want the stocks, not the ETFs, that trade in NASDAQ or New York Stock Exchange. So therefore, I'm limiting the ones that are not trading in the OTCBB or the EMEC exchange. And I want the stock price above $5, volume above 1 million, and then our key criteria, which is the stock price close, has to be above the EMA 8, which is the T line. Now again, I always run this filter at the end of the trading day to see what stocks closed above the T line. Now when you run this, it will show results. So here about 5 stocks. I can see about 5 stocks. So this is again the free version, and I get the results from 1 day ago. So today is Tuesday, the February 9th, and I ran this filter at the end of day today, so I get the results for stocks closing above the T line at the end of day yesterday, which is Monday, the 8th of February. Now, you'd have to pay in order to view the complete list of stocks closing above the T line and to get the most recent filter results. But again, I don't recommend a paid subscription, but if you want to experiment and play with different filters and functionalities that this website offers, or if you want to potentially write and build your own filters, you can consider buying the subscription. But for trading the T line, even the results from 1 day ago should give you at least a few tickers. Even 5 is more than enough, as you can see here, in order to potentially trade. And you can pull up the stock chart for this ticker on stock charts and add the exponential moving average 8 indicator and see where it is at currently. But in this case, it looks like I can see the EMA 8 already charted on the stock fetcher, and I can see how these stocks did today in order to help guide our choice of trade. So keep in mind, these results are showing stocks that closed above the T line as per end of day yesterday, and I can see 5 tickers here, and we can decide which ones we can enter. So I see that Ocugen and Mora will not be my choice, even though they closed above the 8 exponential moving average even today, but they are far away from the T line. So there is a higher potential or probability for a pullback to test the T line again. So I would stay away from these trades. I would pick either Ford Motors or Palantir Technologies or even Apple to go long. And I will stay in the trade until the stock price closes below the exponential moving average of 8, at which point I will get out. So let's see the chart for Ford, for example. As you can see, yesterday it closed above EMA 8, which is why the filter pulled this stock. And today also the stock stayed above EMA 8. So I would potentially go long tomorrow when the market opens, and I will stay in this trade until the stock price closes below EMA 8. So again, you can see this EMA 8 strategy working here clearly. So up until this point, you would stay long, you would close the trade here and get out, and the stock is trading below EMA 8. But again, if you want to go short, you can go short. You can buy it back here to cover. So you can go long here and stay in the trade until here. Here is where it closes below EMA 8. And I will go long again here because it closed above, and stay in the trade. So this is Ford again following the T line. So let's look at Palantir. Similarly, the stock is, so here the stock's closed below EMA 8. I will get out of the trade. But again, in some cases, you might be getting in and getting out because the signals may not be accurate all the time, right? So in this case, I would get out, but I can go back in long here once I get a very good signal, once it closes above EMA 8. So here again, chances are that I might get out of the trade because the stock is going sideways. So if I get in here, I would close out the trade here. It didn't go up. It didn't stay above EMA 8 for a very long time for me to make a huge profit, but at least I get out very quickly. Like, I don't lose much on the trade. I mean, it's better to be safe than sorry. So which is why I'm following the EMA 8. Here again, closes below, closes above, going long, stays above the EMA 8, stays above the EMA 8. I can stay long and I will close the trade here. Now here again, I'm getting signals here, so you can go long here. But in this case, the filter just pulled up the list of stocks closing above EMA 8 as per yesterday. So today I can go long. Well, even tomorrow I can go long as this this rule is being followed. And even Apple is a good stock right now. See, yesterday it closed above. Here it is. I'm not sure if the close is below EMA 8 here. So depending on how the stock opens tomorrow, you can either go long or go short. If it opens above EMA 8, you can go long. If it closes below EMA 8, you can go short. But again, as you can see clearly, you can use this T line to base your entry and exits, and you can place these trades. Again, try to follow this filter for a couple of days, paper trade it, and see the results for yourself. You will be astonished. Okay, this is a classic moving average trading strategy. Keep in mind that the moving average is a lagging indicator, but you can still use this very much for your decision support. All right. So this is the 10, 20, and 50 period simple moving averages. Again, most, if not all, the money managers watch these simple moving averages to make decisions. So you are not alone, right? So the shorter term moving average, which is the 10 period moving average, will move the most and react to price changes very quickly, followed by the 20 period moving average. And then the 50 period moving average will be the slowest to move here to price changes. Now, when something is trending upwards strongly, all these averages will be pointing upwards in the same direction. Now, this is a great sign to go long and to buy the stock. And if all the three averages are pointing downwards, then you can go short. So we typically use this convergence between the moving averages to base our trading decisions. So the trading rules is simple. When the 10 period moving average converges on the 20 period moving average, then we go on an alert. And when the 20 period moving average converges on the 50 period moving averages, we close the trade. Again, this works both up and down. As an example, let's see this chart on a 5-minute time frame intraday that I pulled as an example. Right. So here you can see this stock chart on a 5-minute time frame and the charter communications. So the three different lines. So I think this is blue shows the 10 period moving average, green shows the 20 period moving average, and yellow shows the 50 period moving average. As you can clearly see, price has been trending down. All right, now the 10, the 20, and the 50 are all pointing downwards. It's a good sign to go short. Let's say I go short on the stock here. I short sell the stock at this, say $619. Although the line here is 617.9, let's say I short this at 619. Because all the three moving averages are pointing downwards, it's a great sign to go short. All right. Now what we'll be watching here is the 10 period moving average very closely. It's continuously going down, going down. Well, as long as all the three are going down, you can clearly be in the short side of the trade. Now what's important, what's important here is at which point is the 10 period moving average converging on the 20 period moving average. I can see that here. So here I can see an alert. Well, the reason why I'm saying it as an alert is the 10 period moving average not only converges on the 20, but it points back up to the 20. That's a sign that says we should be on the alert mode. Because in the short term, this is telling us that the prices are going to look more positive. Now, as the 20 period moving average starts to curl up to the 50 period moving average, so here, that's where I circle. So that's where you close the trade. You buy the stock to cover your short position and exit out of the trade. So at that point, it would mean that the change in the trend is seen overall. So as soon as the 20 period moving average is curling up towards the 50 period moving average, it means that there is a big change in the trend overall, and the stock could be trending upwards from now on. So you close the trade here and then you get out. So again, this is a very simple strategy. I would say do this for a 5-minute candle or even a 15-minute candle on an intraday chart of a stock that you follow and see how this plays out. And in the next video, I will also show you an example of an intraday chart to see how we could have traded while watching the price action. Thank you. We typically use convergence between the moving averages to base our trading decisions, like I explained in the previous video. Here I have pulled the intraday trading chart of Boeing on a 5-minute time frame, and I've added all the moving averages, the 10, the 20, and the 50. So the 10 is the blue line, the 20 period moving average is the green, and then the yellow is the 50 period moving average. So I pulled this all on my TradingView platform just to understand how you can base your trading decisions by looking at these three moving averages. So on the 9th of February, as I can see here, there was this resistance line. The stock was going up again. If you looked, previously, if you looked at the past few days, it has been going up. So here, this seems more like a resistance line that I drew in red. And at this juncture, you can see that the 10 period moving average, the 20 and the 50, all are pointing upwards. So this is a great juncture because it's a good sign to go long. So let's say I go long here, right? I'm going to be watching the 10 period moving average when I'm in this trade. So I can stay long, I can stay long, I can stay long because the 10, the 20, and the 50 all are pointing upwards. The 10 is continuously upwards. I can stay in the trade, keep watching the 10 period moving average. Now, the moment at which the 10 period moving average converges on the 20 period moving average, and if it starts to point back down to the 20, so you go on an alert mode here. I'm not going to sell my position just yet, but I'm just going to be on an alert mode, because this is telling me that in the short term, the prices are looking more negative. Now the 10 is going down, the 10 is going down, and I see the 20 is also curling down towards the 50, right? Now as soon as this 20 starts to curl down to the 50, that is when I close the trade and I get out. I take my profits here. So I get in a long position here, and at this juncture, when the 20 is also curling down towards the 50 period moving average, I close my trade. Now that you can see that the 10 and the 20 are trending down, you can also see that the 50 is starting to turn down. So you can go short here. I can short the stock, right? So I'm going to go short here, and you can watch the 10 period moving average now. It's continuously down. I can stay in the short position. The 10, 20, 50, everything is down. I can stay short. Now, what you need to watch for here is when the 10 period moving average converges on the 20. I think here it does. Here it does. It converges. But the point you need to be aware of is when this 10 period moving average converges on the 20, and if it points back up to the 20, you can go on alert, because it tells us in the short term that the prices are looking more positive now. But it continues to go down. It go down, I can stay short, right? As you keep progressing, you can see that the 10 period moving average is starting to converge here on the 20 period moving average, and it's starting to point up. This is when you should go alert again, right? Now, only when the 20 period moving average starts to curl down, starts to curl up to the 50, you can close the trade. You can buy the stock to cover your short position and then close the trade. But in this case, I don't have a signal yet. I just saw the convergence of the 10 on the 20 here, but the 20 is yet to curl up to the 50. So we would still stay short on this trade. Hopefully tomorrow we can see what the price action is. If it goes back up, I can close the trade. So keep in mind that this moving average is a lagging indicator, but you can still use this for decision support. As you can see, you could have done a long trade and walked out with a profit just by looking at the 10, 20, and the 50 period moving averages. Likewise, I could have gone short, and I'm still in the trade. And as soon as this 20 turns back up on the 50, I would close my trade. Also, one more thing that I want to show here is when you're in the uptrend, you can see that the moving averages are acting as a support, as the support line. See this? In this case, the 10 period moving average, it's acting as a support, and then it bounced off, it bounced off, it bounced off. And in some cases, the 20 was used as a support, bounced off. And then here the 50. Likewise, if you're going through the downward trend where you're on a short position, you can see that the 10 period moving average is acting as a resistance, right? And if this breaches it, test the 20 period moving average. So the 20 period moving average acts as resistance. And rare cases, extreme price swings will make the 50 period moving average acts as resistance. But again, clearly you can use this 10, 20, 50 strategy to get in and get out of trades. As you can see, this is a helpful way to make your decision to enter and exit the trade. Price action scalping strategy. Now all you're doing here is we're just reacting to the price action in this strategy. Now for this setup, I will be using TradingView to observe candlestick formation real time, and you must have a subscription there. If not, if you can observe or have access to real-time candlestick formation and charts in your trading platform, that should suffice. Now I'll walk you through the concepts here, but please bear with the theory, but then I will take you through a few examples to show this in action, and how we enter and exit the trades, and then this will all make sense. So you'll have to pull up the charts and the candlesticks on a 15-minute time frame, and you'd have to add these following indicators that I've listed here. So the 5-period relative strength index, which is the RSI 5, the Bollinger Bands. Now, I think in the previous video I mentioned that for short-term trading we use the 10-day moving average and 1.5 standard deviation for the bands. So I put Bollinger Bands 10, 1.5. That's what it denotes. Now volume. Volume is automatically populated. If not, please add this to the chart. And the T-line, again, that is the exponential moving average 8. Again, this is not required, but if it helps to be on your charts, you can add it on there. Now, do not trade this strategy in the first 1 hour after the market opens or the last 1 hour before the market closes. So any other time in between is when this works the best. Again, if the signals form at the end of the first hour after the market opens, you can get in though. The only downside with this strategy is you'll be watching the stock throughout the day with this scalping strategy. Rules for entry and exit. So you go on the alert mode when the 5-period RSI is oversold. That is, as soon as it hits 30, you go on an alert mode. Now you wait to see a further decline in RSI at this point. The lower it goes, the better, and we decide the entry point only if it gets to below 20. And sometimes, if the stock's fall is greater, if you see the red candles in the price action, it can go even below 15 in order for us to catch the bounce and scalp. So what would be the rules for entry here? So when the stock reaches the lower Bollinger Band or outside the lower Bollinger Band, and then you'd also see continuous red candles, minimum of 2 consecutive big red candles to a maximum of 5 or more has to be seen or can be seen when this RSI 5 is getting to 20 and even dropping below 20 in some cases. So following this period of red candles, what you're doing is you're just waiting to see a green candle formation. That is a green candlestick where the close is higher than the open. So the green candle at the end of that 15 minutes along with an increasing RSI line is what you're looking for. So consecutive down candles, which is shown by the red candles, and once the RSI gets to 20, and it can even fall below 20, keep that in mind. So at the end of that period, once you see a candle that closes green following this period of decline, that's the confirmation green candle. The open following this green candle confirmation, you just buy the stock. You just go long no matter what. All right. Now, once going long, at what point do you exit with a profit and at what point you take a loss? So the exit profit point is you would stay in the trade as long as the candles make a higher low compared to this green candle that gave us the signal in the first place, which is the confirmation candle. So you would stay in this trade until this until the price hits the upper Bollinger Band. So you would take profits as soon as the candles hit the upper Bollinger Band, regardless of where the relative strength index is at. That is, you don't wait for the RSI to get to and stay in the overbought levels, because the strategy is nothing but a bounce we are catching, as we do not know whether the stock is going to reverse trend and start going upward. So just take profits as soon as the price action and the stock hits the upper Bollinger Band. Now there are times this may not work, so you would exit with a loss. So when will this not work? Well, keep in mind that the probability for the bounce up is extremely high, but if at any point after your entry, in any of the 15 minutes, if you see a candle whose low is lower than the low set up by that confirmation candle which gave us the entry point, you must get out of the trade. The confirmation candle, so you're basically entering at the next 15 minutes when the candle opens after the green candle close. So after entering this trade, only if you see a candle with a lower low compared to this lows in the green confirmation candle, you exit the trade. That is, you close the trade and take the loss. And in some cases, you might even see that this may not even be a loss, but you might walk out with a tiny profit. But in case, I mean, the trends won't continue, but there are some cases where the stock will reach the upper Bollinger Band. I will show you examples in the coming videos, so this will all make sense. See an example of this price action scalping strategy. Now I have the screenshot of the Amazon stock chart from my TradingView platform, and I pulled the 15-minute stock chart, and I have the 15-minute candlesticks for Amazon, and I also have the 5-period RSI close as well as the Bollinger Bands. I just stick to the indicators that I explained in the previous video for this particular strategy and just add them all on the charts. Now, as per the rules, I go on an alert mode once I see 3 down candles, 3 huge red down candles, as well as a declining RSI. Well, the RSI has to be in an oversold territory. In this case, RSI has to hit 30 for me to get in an alert mode, but then I see continuously declining RSI. In this case, it's going further below 20, so which is a great signal for me. Keep in mind that these 3 down candles happened at the first hour after the market opens. Now, I'm not getting into this trade at the first hour of the market open as per my rules. Now, the confirmation green candle happened after the end of the first 1 hour after the market opened. So it happened at from 10:45 to 11. Well, actually from, what is this? Yes, 10:45 to 11. That's when this happened. So it's great. Now as per the rules, I blindly get into the trade at the next candle open. So from 11 to 11:15, as soon as the candle opens at 11, I buy the stock. I think the entry price was at around 3277.1, and you can also see the RSI was increasing in the green candle confirmation signal, and it continues to. Now I stay in this trade until the stock price hits the upper Bollinger Bands in order to take profits. Right? In this case, I was lucky. The stock hit the upper Bollinger Bands within a span of 2 hours. So I exit the position at 1 o'clock when it crossed the Bollinger Bands, and then it closed right on it at 3283. Right? So this was a tiny scalp of about 0.2 percentage. And again, unless you have a huge capital, this 0.2% is not going to mean anything. In those cases, what I would recommend is you can day trade weekly call options with Amazon. That way your capital requirement will be less, and you could also scalp more money out of a fewer dollar investment. So in this case, as an example, once the candle opens at 11 a.m., instead of buying the stock at 3277.1, let's say you buy out of the money call option, let's say like 2 strikes above this price. So I would say 3279 would have been a good price. Whatever the stock was trading, whatever the call option price was at that particular strike at around 3279, you just buy the call option and then stay in the trade until the stock price hits the upper Bollinger Band. So at 3283, you can close your option trade. So you bought the out of the money call option with a strike of 3279. So when you close the trade at 3283, you are actually $4 in the money. So you would likely make $400 in profit. So your investment would have been limited as opposed to buying the stock, and you would have made potentially a $400 scalp within a span of 2 hours. So that might be a better way to magnify your gains if you don't have the capital required to scalp this 0.2% to get a meaningful dollar return for that particular day, right? So that's another option. Now, at what point you would have taken a loss? Like I mentioned, as per the rules, after the green confirmation candle signal, if at any point during the 15 minutes candle, if the low of any of those candles gets further than the low set up by this confirmation signal, you just blindly get out of the trade and exit the trade with a loss. So in this case, luckily the lows have been higher than the lows set up by this candle. So you stay in the trade until the stock price closes or hits the upper Bollinger Band. So that way you can take the profits. But in this case, let's say after you entered, the low of this candle went further than the low of this confirmation candle, you would just close the trade and get out of the trade with a loss. I hope this example explains the price action scalping strategy, but in the coming videos I'll also show you 2 more examples just to briefly walk through this concept. Here's another example to see how I will trade this strategy. I pulled up the 15-minute chart for Charter Communications, and each candle shows the 15 minutes price action. And like I said, I will not get into these I will not trade this strategy in the first 1 hour when the market opens and in the last 1 hour before the market closes. But keep in mind that if at the end of the first 1 hour, if these signals are shaping up and if I get the confirmation, I will still get into this trade. So here's the example. So on the 10th of February, the stock opened lower. Now the stock goes in the alert mode and the watch mode from 9:45 to 10 because the RSI is starting to drop below 30, which is the oversold condition, right? But I still don't get into this trade yet because I don't have the confirmations and the rules that I always follow to get in and get out. Now from 10:15 to 10:30, so that is the almost at the end of the first 1 hour, right? So here the RSI is still below 14.3, which is a good sign. I need it to be always below 20 for me to get the good signals, and the candle has to be green, right? And it's also below the lower Bollinger Band, as you can see. So the stock closed green. This is the confirmation signal for me. So I get into this trade blindly in the next 15 minutes as soon as the candle opens from 10:30 to 10:45. So the candle opens here at about 612.55. So let's say I get into this trade at 612.55. And I'm going to stay in this trade. So let's see what happens in the next 15 minutes from 10:45 to 11. So what's interesting here is the candle is a red candle. Now it's still not a reason to get out, but what you need to be watching here is the lows of this candle. So the low of this candle was about 601.71. You can see. So when I hover over this candlestick, you can see the open, high, low, and close here. So when I'm hovering over there, you can see what the low was. So the low was 611.71, which is a lower low compared to the confirmation signal which we got here. So this was the confirmation candle. The low here was 612.16. So you get in here at about 612.55. And this candle closed at 613.27, but the low of this candle was a lower low compared to the confirmation candle. So therefore, in the next 15 minutes, as soon as the candle opens, I'm out of this trade. So this candle opened at 613.40. I'm out of this trade with a loss. Well, not actually at a loss because I got in at 612.55. I'm just closing this trade at 613.40. No strong trends, so I'm just getting out of this trade because this candle's low was a lower low compared to the confirmation candle. I mean, imagine what would have happened if I stayed in this trade, right? See, the stock kept falling. So it was a good move to get out. But let's see. Again, here the RSI was low continuously. I mean, the stock is making down moves as evident from these three red candles. So you go on alert, but the RSI is also falling drastically. So the RSI, 5-period RSI fell to 9.85, but still not a sign to get into this trade. Let's see what happens from 12:45 to 1. So the candle closed green. This is a confirmation signal. So from 12:45 to 1, the candle closed green. So blindly, I'm going to buy the stock at the next open from 1 to 115. So I get into the stock at 609.73. I'm going to stay in this trade as long as the candles hit the upper Bollinger Band. That's the rule to take the profits. But again, keep monitoring the lows of the candle. If the lows get lower than the lows set up by this confirmation candle, you just get out of the trade no matter what. All right. So I'm staying in this trade from 609.73. I am here. Let's see what the lows of this is. Higher than this low, so no reason to panic and get out of the trade. The RSI is continuously creeping up, which is good. It's getting into the overbought zone, not a problem. But in this candle, I hit the Bollinger Band. All right. So I'm going to close the trade at 612.88 because here itself it touched the Bollinger Band and it went above. So I'm going to close the trade at this instance. So that's again a point. So you're getting out at what? 612.88. So that's from 609.73 to 612.88. That's about almost a 0.5% scalp. So that's a great strategy if you're trading in and trading out. So you made that 0.5% within a span of what? 15, 30, 1 hour, 150. So about 1.5 hours, you just made that 0.5% scalp. All right. So let's keep watching it. Again, RSI is going below 30. I'm going on an alert mode. No signals yet. No signals yet. No signals yet. Here the RSI is at 11. And the next candle is green. That's a confirmation. I am going to get into this trade in the next open, which is here. So here's a green confirmation candle from 10:30 to 10:45. So from 10:45 to 11, as soon as the stock opens at 10:45 in that 15-minute time frame, I get in at 607.70. RSI is pretty good. It's creeping up. Again, no reason to panic here because this low is higher than this low from the confirmation candle, which is pretty good for us. So I'm going to stay in this trade until it hits the Bollinger Band. So here I see signs of it touching the Bollinger Band. Although it didn't close at the upper Bollinger Band, it just closed slightly below the upper Bollinger Band. So in the next candle, I will get out because it touched the upper Bollinger Band. So let's say I get out at 610.49. So that's again an almost 0.5% scalp from what? From 10:45. So that's 30 minutes, 1 hour, another 1.5 hours. I made another 0.5% scalp. So you can magnify your profits if you're trading weekly options in these stocks by, instead of buying the stock here, let's say you buy out of money call option, you can scalp a few more dollars with a fewer capital. If you don't have lots of money to buy a $615 stock, you can do that as an alternative strategy. You would scalp more by investing less amounts of money by buying option. And you can get in and get out using those same principles. So again, I keep following. Stock is overbought. Here I still don't have signals. It's only at 30. So no reason to go long. No reason to go long here as well because it's at only 26. It's not creeping below 20. So although here you can see the bounce up, it still doesn't meet the rules that I set in my strategy, so I will not go long. Hope this helps. Let's look at another stock chart to see if we can follow along with this trading strategy. So I have a Boeing here on the 15-minute time frame again. So on the 9th of February, well, we're looking at 10th of February. So stock opened lower, 2 candles But again, if the confirmation signal is something that you get at the end of the first hour of trading, like I mentioned earlier, only then you can consider trading this. So at this point, it's from 10 to 10:15. It's not even at the end of the first trading hour. So I would not trade this. Let's keep going. What's happening? Stock is trading within a range. Well, at least the RSI. Here, let's see what the RSI is at. 22.24. It's still not a strong signal for me to get in, even though I have consecutive red candles. I want the RSI to be far below 20 as per the rules. Let's keep going. I don't see the RSI falling. So here I'm seeing RSI falling. So let's see. So it's at about 11. That's a pretty good signal for an oversold. And I see 3 strong red candles, down candles. And the stock is hovering around the Bollinger Band. So let's see what happens in the next candle. I see a green candle. That's a confirmation candle for me. So at the end of 12:45, candle closed green. The minute when it opens from 12:45 to 1, I get in on this trade. So the open is at 209.13. I buy the stock here and I stay in this trade as long as it hits the upper end of the Bollinger Band, and I close the trade if the stocks makes a low that is lower than this confirmation low, which is 208.63. I just close the trade and I get out of the trade and take the losses if that happens. So in this case, I go long here at 209.13. I stay in the trade until it hits the Bollinger Band here. So it crosses above the Bollinger Band and then it closes. So I get out at 210.53. So that's a pretty good profit. Again, 209.13 to 210.53. That's all within a span of 1.5 hours, right? So that's, again, I haven't calculated the percentage scalp here, but you can do it at your end. But that's still pretty good. But again, if you want, you can trade options like I mentioned earlier. And let's see here again, the RSI is falling. 26, 23, still not a good signal. Even though I see the bounce, I'm not going to get in there. So here, let's see, 21, still not strong enough for me to get in. So that's the Boeing example. That's again bolstering the trading strategy that I explained earlier.